Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about my own portfolio and update you on my positions, the return of the portfolio, and a few changes to this portfolio during this last month. I noticed that a lot of YouTubers out there don't really want to share their portfolio performance when we are in a bear market and everything goes down, and I agree, it's not really fun to be down 10, 20, 30%, and you probably look stupid in the eyes of your subscribers. I never shared my portfolio performance when I was up like 30% in 2021, but I think it's more important to share my portfolio with my audience when the market is down and my portfolio is down, and show everybody a process. If you're investing in the stock market, you should prepare yourself to be down 50% in the short term. I like to keep it real and demonstrate the process of long-term investing here. While the short-term performance doesn't really matter, I always like to compare the performance of my portfolio with the performance of S&P 500 as the average return of the US market in the long run. And my goal is to be able to beat this index in terms of the return by a good margin over the next 10 years. I used pretty much all of my investment in 2020 to buy a house and therefore started this new portfolio in January 2021 and slowly dollar cost average into the stocks that I found them undervalued or fairly valued. I will try to update you each month with full transparency and show you the exact performance of my portfolio and also my wife portfolio, which I consider them a grand portfolio. So yeah, I just want to start with the asset allocation. As you can see here, most of our net worth, I mean me and my wife, is in real estate at the moment. And this is the house that we bought recently. Next, we have stocks, which I divide them geographically into Canadian stocks, US stocks, and Chinese stocks. And I have a small stake in crypto as well. Right now we have 0% allocation to Chinese stocks, and that's because I recently sold our BABA and Pinduoduo positions as they were up 15% and 45% respectively even during this bear market, and shuffled those funds into Amazon, Meta, and PayPal, which are down significantly. This is the Excel sheet that I use to track our personal investments and also my wife investments as one grand portfolio. And as you can see, all of these investments are in red in terms of the return, except Google. The important metric here are the total return of the grand portfolio, which is minus 12% from January 2021 to date. And of course, we dollar cost average into the market, and most of our deposits were late 2021. The portfolio annual dividend is close to $1,200 per year, which is totally tax-free, as all of our dividend stocks are inside TFSA. The yield of this portfolio is 1.71% at the moment. This is a nice graphical representation of the stocks we hold in this grand portfolio. The majority of these positions are tech and financial stocks mixed with some REITs and consumer discretionary stocks. I absolutely want to add consumer staples, industrial and energy stocks in the future when those sectors go through a correction cycle. This is where I track the returns of our grand portfolio against S&P 500 and also our initial deposits. As you can see, we consistently deposit cash and buy stocks in these portfolios. And fortunately, the performance of our portfolio was still better than S&P 500 in the last few months, which is mainly due to good performance of Canadian stocks. Okay. Now let's look at my personal WealthSimple account, excluding my wife holdings in her own portfolio. Overall, I have close to 51,000 Canadian dollars worth of stocks in this account at the moment. My TFSA, which is mostly Canadian companies, performed very well actually, and it is down only 3%, which is kind of great performance in my opinion in this market. I analyzed pretty much all of these stocks before on the channel. On Canadian side of the account, we have a stable performance, and I didn't have any major changes in the past months other than buying the dip on my positions. Here we have Aritzia, which is a growth-focused Canadian fashion stocks, and I'm down near over 20% on this position at the moment. I want to increase my ownership in Aritzia, and my goal is to buy another 40 shares to have basically 100 shares of Aritzia inside my TFSA. The next position is Brookfield Asset Management, or BAM, and I have no doubt in my mind that this stock will outperform S&P 500 in the next 10 years. I am down a whopping 17% on this position at the moment, but I don't have plan to buy more BAM shares at this point, as I'm happy with the number of shares that I own at the moment. Unless it goes down another 10% or so, at that point I would buy more BAM. The next two positions are Bank of Nova Scotia and EQ Bank, which are both amazing Canadian banks. In fact, EQ Bank is absolutely undervalued in my opinion at the moment. I am down 18 and 15% on these two positions respectively. I bought a few more shares of EQ Bank and Bank of Nova Scotia in the past month to bring my average cost down. Next, I have two REITs, Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US and Europe, and Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both growth potential and consistent monthly dividends. I'm down 16 and 13% on these positions too. I bought almost 20 shares of Killam in the past month to bring my average cost down. Next, I have Power Corporation of Canada, which is mainly an insurance business with a strong balance sheet and consistent dividend increases. I'm down 14% on this position too. Finally, we have TD Bank, which is the only flat position in this portfolio at the moment, and I bought 2 more shares of TD Bank in the past month. In the US side of my account, basically of my TFSA, Google is the only position I hold, and it is green. It is in the green by 21%, which is absolutely amazing performance, even considering the recent market correction and crash. At some point, I was up close to 60% on my Google position. My plan for Google is to just hold it during this crash. Next, let's look at the RRSP. Here, the situation is not pretty at all. I plan to hold most of my US and Chinese stocks here in my RRSP. My biggest investment here so far is Meta Platforms or Facebook, which is down 46% with a terrible performance. But I'm absolutely sure that Meta will rebound in the future, as it is definitely undervalued here. I think Meta is one of the most undervalued stocks you can find in the whole market right now. As I mentioned, I sold Alibaba at a 15% profit here and reshuffled that money into Amazon and PayPal. These are two stocks which are small positions at the moment, and I'm consistently trying to add to my number of shares in Amazon and PayPal during this market crash. My plan with all of these stocks that I show you here is to hold and add to them during these dips. Even if I go down another 20%, I would not sell any of these stocks here. I analyze each and every stock I buy, and therefore I'm not going to emotionally react to price actions of these stocks. These are my assets, and I know the value of my assets, so I'm not going to sell them for low offers out there. There you are, guys. I hope you enjoyed the video and my transparency in showing you all the positions I have in my portfolio and also the performance of my stocks. If you enjoyed the video, consider subscribing to the channel to see similar video. Thank you for watching, and I see you in the next video. Farewell.